Hey guys, it's Jeffrey and welcome to my channel where I post daily Forex training, educational videos, and also my analysis videos for the day and for the week ahead. So real quick, today's video is going to be about how to find and define market structure. So basically, in a lot of my previous videos, I talk about how I'm looking for a market structure break and I'm looking to enter off the market structure break on an hourly chart. And a lot of people are confused by what that means and what a market structure break is. So I wanted to make a video going over exactly that. So with that being said, let's go ahead and dive into the charts. Today I am using TradingView, and typically I just use TradingView to mark up my dollar index chart, but it really helps me illustrate my markups on the chart whenever I'm teaching. So I'm going to use TradingView just for this video. But right now I'm looking at the USD JPY on a daily time frame, and basically let's find some examples of market structure and market structure being broken. Okay. So if we look here, we've got a high right here, and this is basically the highest swing high in the range that we're in, right? Because we're basically in between this high and right now, but at between this low and this high up here. That's the swing that we're trading in on the daily time frame. Okay. All right. So anything in between this trading range is considered, a valid trade. So whether you're looking to basically buy it and put your stop loss below here and target, levels up here, you can do that. Or if you're waiting to sell it, then you would need to wait for this low to break. So let me go over a clear example of a market structure break. Throughout this whole swing here, we're making lows, lower highs, lower lows, lower highs, lower lows, lower highs, lower lows, lower highs, and so on, right? So we're in a bearish trending market. How would we classify a market structure break in a bearish trending market? Well, we would need basically a higher high to form and a higher low to form. That would indicate that the market has switched direction on the daily time frame. So we would have moved from a downtrend to now an uptrend. So if we zoom into this, we can see that we're making lower lows, right, and lower highs all through here. Last week's trading, if you look, we had a strong push up and we broke this high here, right? It was a previous short-term high before a lower low was made. Well, once we broke back above this, this is now a break in market structure, okay? Why is that? Because we've got a low, now we've got a high. It's a higher high than this one, okay? So what are we expecting now? Well, if we don't break below this low and we hold above it and form a higher low, then that would indicate we've got bullish market structure starting to unfold. So if you drop down to a lower time frame, you can see this a little bit clearer, but I like to start on a daily time frame to basically get a better understanding of the charts on a lower time frame. And the only way that you can do that is by basically mapping out your charts on a higher time frame in order to see what levels or ideas you're looking to unfold for that lower time frame, trade setup. So currently I'm expecting basically a higher low to form, okay? And how can we map out where the higher low is going to form? Well, we can draw our fibs on the swing basically from the low to the high, and we can map out our optimal entries, right? 61.8, 70.5, and 79%. All of these levels are optimal trade entries, right? So, and that's exactly what ICT teaches, is optimal trade entry pattern, and that pattern is basically, a break in market structure and a retracement down into an optimal trade entry, which are these three levels here: 61.8, 70.5, and 79%. So add those to your fib levels if you don't have that on your chart already. So I'm expecting a higher low to form, in or near the optimal trade entry, and then I'm looking for another higher high. And that would basically confirm that we've got a low, a higher high, a higher low, and then a higher high. So we got bullish market structure unfolding. So an aggressive entry would be entering it now, right? But I like to wait for it to prove to me that it's going to be a bullish market structure. So I'm going to wait for this higher low to form and then form another higher high. And I would wait to get on the retest of that. So I basically want two swings to form to prove to me. So I want a low, a high, a low, and another high. If I get that, then I'll get in on the retest. But I don't like to basically trust this first move because sometimes they just come back up here, clear the stops, and then move lower. But you avoid that by waiting for the next higher low to form and then another higher high, right? So that's just kind of how I do it, but some people may do it different, but that's just what I find that works best for me. So that was basically an example of a break in market structure to the bullish side. Now let's go over an example here. All right. If we're looking at this market, basically this swing from here to here. So if we're looking from here to here, this lows all through here, and we're making higher highs, okay? So how do we see a break in market structure? When we form a lower low, okay? So until this low is broken, we were making higher lows. You see that? So higher low, higher low, higher low, higher low, higher low, higher low, and then we started breaking down, okay? Once we broke this level here, this is a key support level on a daily time frame. How do you know it's a key support level on a daily time frame? Because once it traded into this level, you've seen a strong reaction and it pushed up hard. So we know that's a key support level. Now we've broken that key support level. So what does that indicate? A break in market structure. So how could you basically get on board this for a sell once you got this break in market structure? Well, you could wait for an optimal trade entry setup. So you would draw your fibs from the high to the low. Why are you drawing it on this swing? Basically because this is the swing that broke market structure. So you wait for a retracement back up into a logical optimal trade entry level, and your stop loss is going to go above the previous swing, which is here. Keep in mind this is on a daily time frame, so we're looking at 113 to 110, 300 pips. So you can enter at 61.8, 70.5. We didn't quite get the entry at 79, but either of these two entry levels are good opportunities with your stop loss above here, targeting this low as your first objective. Notice how it gave an entry here, traded lower, came back, gave you another entry, traded lower, came back, gave you a third opportunity to get on board, then it broke lower. Look at how quick it traded below this low here. It didn't waste any time. And the reason because of that is we've had the break in market structure. We had the indication that price wants to go lower now. So the only reason it's coming back up here is to trap people in the market thinking that they're going to push it higher. Okay, so you have to be able to distinguish whether you're still in a bullish market or are you in a potential reversal scenario. In this case, we had a market structure break, right, to the sell side. In this example, we traded up, hit the optimal trade entry, and then we hit the first target level, right? So your swing trade target could have been this low here. And eventually, we reached that level, right? But for me, I typically just stick to scalps or day trades, so I would have just been targeting this low, and I would have got my 300 pips and got out. Right, so this unfolded, and if you would have gotten in here, it unfolded in 1, 2, 3, 4, 6 days. So in a week, you've basically gotten 300 pips off just one trade setup. So that was just a few examples for you guys. I would, pull up your charts, go study this, test it on your own time, see how it works. And if you're confused about anything or have any questions about it, just drop them in the comments below. And I answer all the comments, so I'll let you know and give you my feedback basically on what you're seeing. And even send me some pictures of your charts. I'll be more than happy to analyze your charts for you that you've marked up. Best place to send me those would either be in the Facebook group, so you could find those links to that in the description below, or on my Instagram. So that's at JROD, the number 4X. So you can send me the pictures there. Facebook group, either one is fine. But that's it for today's video. Make sure that you hit that thumbs up right below this video, and I will see you guys tomorrow.